Check test one, check test two. Yes, ladies and gentlemen, we are back, and this is Conscious Crypto every single weekday at 2 p.m. in the afternoon. My name is MC Medina, and we're giving you the latest and the absolute greatest in DeFi crypto news. And today is Monday, October the 18th. Hope you guys had a wonderful weekend. Whole bunch of movement going on over the weekend. Bitcoin passing $60,000. Ethereum also up at 38.44 currently right now. And let's get into the chat really quick before we get started too far into the segment, into the show today. Check one, check two. There we go. Let's go ahead and hop into the chats. Let's see. Let's do this. There we go. All right, let's see if we can go ahead and host the channel. Bam. Oh, wow. Okay, guys. Some of the latest and the greatest news is coming in 14 hours ago. We're going to just dive straight into it. And this is getting into the adoption news for today. We got the Mexican medical firm embracing the blockchain for COVID-19 test certificates. MDS Mexico will be using blockchain technology to verify the authenticity of its rapid coronavirus test results. Medical service companies MDS Mexico has launched a rapid COVID-19 testing service that uses blockchain technology to verify its results, according to a Sunday report from local media outlet iPro UP News. MDS Mexico has launched a digital platform allowing its patients to access results that are updated in real time. Now, the results are delivered physically and feature a QR code that can be scanned to verify the results and access a patient's vaccination history on MDS Mexico's blockchain. MDS stated that it adopted blockchain to safeguard the results of clinical tests, protect patients' personal data, and prevent the falsification of COVID-19 test results. MDS's website says, to avoid the falsification of negative results, we began to certify the SARS-CoV-2 detection test with blockchain technology and cryptographic signature, which protects the information in a unique, immutable, and unalterable QR code that can be verified worldwide. Testing results uploaded to MDS's blockchain also includes a cryptographic signature from the doctor who verified the outcome of the test. MDS is not the first entity in Mexico to embrace blockchain for digitized COVID-19 test results, with Mexico's National Chamber of Commerce, Canaco, announcing a state-backed initiative to digitize vaccination passports in partnership with private blockchain technology firm Certify in April. And in August, the blockchain industry representatives in Australia also pushed for the introduction of a blockchain-based vaccine registry to stem the proliferation of counterfeit COVID-19 vaccine passports online. So there we go. Australia and Mexico looks like both embracing the blockchain for COVID-19 purposes. Seems like they're going to be taking advantage of the smart contracts therein. All right, now let's get into a little bit of the Bitcoin prices and other altcoins right now. We've got Bitcoin up at 61,525. That's about 1% higher in the gain, 1% gain in the last 24 hours. Ethereum at 3707, down 2.66. XRP also down about 4 points. Bitcoin Cash is also down. Let me see. I want to get into some of the top gainers over the weekend here. Let's get into some of the prices. The overall market is down right now, 0.52% in the past 24 hours. Let's get into, let's see here. Okay, now this thing's asking me to verify all the buses. So you guys give me a second here. All the buses in this thing. We got one more bus right there. I think this thing might have sent me to an offshoot. Okay, there we go. Right, okay, guys. So the overall market is down right now, 0.52%. Let's get into some of the top gainers right now. We have Ampleforth. It's a governance token. Is up 20%. Ankr is up 14%. And Shiba Inu continues to grow. It's our number 3 top gainer today at 13.36% gains in the last 24 hours. Dogecoin is right behind it with a 7.11% gain in the last 24 hours. And we got TrueFi, Cartesi, LivePeer, Horizon, and Binance Coin. Seems like we have PancakeSwap is also up. The Rye Reflex. Let's see. We got a new listing, Avalanche, currently right now on Coinbase. I want to see, let's learn a little bit more about the Ampleforth governance token. Forth is a cryptocurrency that powers Ampleforth, which is a protocol that automatically adjusts the supply of its native token, AMPL or Ample, in response to demand. Forth is Ampleforth's governance token. Forth holders can vote on proposed changes to the Ampleforth protocol or delegate their votes to representatives who vote on their behalf. The price of Ampleforth governance token has risen by 32.87% in the last 7 days. The price increased by 24.18% in the last 24 hours. And in the past hour, the price grew by 3.97%. The current price is 16.956 per Forth, and the Ampleforth governance token is 75.83% below the all-time high of 70.16. So still a lot of room to grow there. Some of the most popular cryptocurrencies right now on Coinbase, we see Uniswap, we see Horizon, we see AMP, we see Quant, Curve, DAO token, Stellar Lumens, and Decentraland, all on the popular cryptos here on Coinbase. All right, now let's get back over here to the latest and the greatest in the crypto DeFi news right now. Let's see what's the latest and the greatest. Now, this news coming in 44 minutes ago. Interactive Brokers launches a crypto trading in the U.S. for 4 tokens. The U.S.-based financial advisors with Interactive Brokers are now able to recommend cryptocurrency investments to their clients. That's just epic news right now. The brokerage firm is called Interactive Brokers Group, is allowing investment advisors registered with the company to trade 4 cryptocurrencies. In an October 18th announcement, which is today, Interactive Brokers said that its registered investment advisors would be able to trade and custody Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. So those are the 4 cryptos for clients using the Paxos Trust Company. The firm reported that this service was currently only available for its advisors in the United States, but planned to launch crypto trading for global clients in the future. quote, allocating a small percentage of assets to cryptocurrency as part of a well-diversified portfolio has steadily become more commonplace, and advisors may wish to recommend cryptocurrency to their clients, said Interactive Brokers Executive Vice President of Marketing and Product Development, Steve Sanders. With headquarters in the U.S., Interactive Brokers falls under the purview of regulators, including the Securities and Exchange Commission, or the SEC, and the Financial Industry Regulatory Authority. As of October 1st, the firm reported 1.54 million client accounts with a $335.8 billion in equity. So congratulations there to the Interactive Brokers Group and the Paxos Trust Company. Looks like you guys are making a step forward. So congratulations to you. Those 4 tokens, again, Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. If you don't already own these coins, it's highly recommended. Again, this is not financial advice. This is just me sharing my personal stories with you. I've been holding Bitcoin, Ethereum, Bitcoin Cash, and Litecoin for close to 8 years now, maybe a little bit over. And I have not lost any money doing that at all whatsoever. All right, though. So the latest and the greatest coming in, Ankr Network. As I said before, it looks like Ankr Network is one of the top gainers for the last 24 hours. Ankr is up 14.6% right now, and probably, if I had to guess, it has something to do with this. Ankr Network stacks and Cadena rally while most altcoins cool off. Let's find out what's going on with Ankr. ANK, STX, and KDA took a different path than most altcoins by posting double-digit gains over the past 24 hours. Even with Bitcoin price on the verge of a new all-time high, the cryptocurrency market projects an aura of anxious optimism on October 18th, as investors await the official launch of the first Bitcoin exchange traded fund, or an ETF, which is set to begin trading on October 19th. So tomorrow, big news, we're going to start trading the Bitcoin ETF on the stock market. So very interesting stuff. Now, while the market waits for the historic ETF launch, Bitcoin bulls are battling to hold the 62,000 level as support. Meanwhile, a handful of altcoins posted double-digit rallies today as traders possibly look to capitalize on the gains they provide when Bitcoin price consolidates. Today's market movers, we've got the Ankr Network at plus 19.75%. We've got Stacks at a plus 18.54%, and Cadena right behind it at a plus 17.01. The data from TradingView and Cointelegraph Markets Pro shows that the biggest gainers over the past 24 hours are the Ankr Network, Stacks, and Cadena. Now, Ankr Network partners with the Sacramento Kings. So Ankr Network's blockchain solution is designed to use idle computing power from devices and data centers from around the world to help power the crypto ecosystem. Vortex trademark data from Cointelegraph Markets Pro began to detect a bullish outlook for Ankr on October 17th, prior to the recent price rise. The Vortex score, exclusive to Cointelegraph, is an algorithmic comparison of historical and current market conditions derived from a combination of data points, including market sentiment, trading volume, recent price movements, and Twitter activity. Now, if you take a look at the chart is showing that the Vortices score for Ankr began to pick up on October 17th and climbed to a high of 70 around 4 hours before the price spiked 46% over the next day. The jump in price for Ankr comes following the project's multi-year sponsorship deal with the National Basketball Association's Sacramento King, the NBA Sacramento Kings. Stacks advances towards launching smart contract on Bitcoin. Now, Stacks is a layer 1 blockchain solution focused on bringing smart contracts and decentralized applications to the Bitcoin network. Vortex data from Cointelegraph Markets Pro began to detect a bullish outlook for STX on October 11th prior to the recent price rise. Around 5 hours before the price began to increase by 55% over the next week, it began to pick up on October 11th, reaching a high of 88. The rise in prominence for STX comes as the possible launch for multiple Bitcoin ETFs has excited the wider investment community about the possibility of smart contract capabilities on the Bitcoin network. Cadena adds NTF capabilities. Cadena price also took bullish turn over the last 24 hours. Data coming in shows that after hitting a low of 2.14 on October 16th, the price of KDA has rallied 30%. To a daily high of $2.79 on today, October 18th, as its 24-hour trading volume spiked 313% to 9.4 million. The increase in momentum for KDA comes following the protocol's partnership with Immutable Records, which will bring a fully built NFT marketplace to the Cadena ecosystem. The overall cryptocurrency market cap now stands at 2.462 trillion, and Bitcoin's dominance rate is 47.2%. Again, you guys, the views and opinion expressed here is solely those of the author, and they do not necessarily reflect the views of Casa de Prana TV, Twitch, myself, MC Medina, or anybody else on the platform. And this is not financial advice. It's just a little bit of news for you, all right? Really coming in hot with the EFT release here. It's going to be really exciting tomorrow as the EFT comes out. Things start to hit the stock market. It looks like we're going to have to do some more research in Cadena. Cadena seems like it's going to be the answer for quite a bit of different things when it comes to the future of digitization. We've got Rarible introducing a zero-cost NFT minting feature. We've got the Bitcoin RSI strength suggests that the Bitcoin price is still far from its cycle top. This is news coming in 1 hour ago. The sentiment may be in extreme greed, quote, extreme greed territory, but the math-based metrics continue to leave the door open for further Bitcoin price gains. All right, Bitcoin has barely started its run to new all-time highs, and if its relative strength index repeats historical behavior. As noted by popular Twitter analyst Tech Dev on October 18th, the RSI has yet to produce macro top signals for Bitcoin/USD. The RSI falls short of classic macro top zone. Bitcoin has kept the market guessing as it tracks sideways just below all-time highs without hitting them this month. With time, concerns have mounted that the blow-off top that many expect may not be as high as the bulls hope. Looking at technical data, however, the real state of Bitcoin's bull run becomes apparent. There's a lot more left. Update on the 2-week RSI channel, which has called every Bitcoin top and bottom in history. TechDev explained the current RSI value 68, projected top value of 93 to 94,000. Every time it's broken the EQ, it's visited the top. Clear skies ahead. Don't forget when it comes time to reinvest at the bottom. History has proven RSI to be a key factor in tracking Bitcoin's price strength on longer time frames. A 90-plus reading has coincided with tops, and until this level is broken, Bitcoin spot price action trends higher. TechDev previously forecasted a potential top for this cycle lying between 200,000 and 300,000, again based on mathematical phenomena, notably Fibonacci sequences, which have also characterized every single bull run. Extreme greed lurks in the background. Technical formulas such as these paint a decidedly different picture to price metrics based on different aspect ratios. Based on different aspects of crypto markets. This week, the crypto fear and greed index returned to its highest possible area, quote, extreme greed. At 78 to 100, the index is noticeably closer to its own peak than the RSI. This likewise historically signaling macro tops. As reported, the 95 to 100 and up has accompanied every top in Bitcoin's history, leaving precious little room for growth unless that growth itself becomes more sustainable. So looking like we still have quite a bit of room to grow. Bitcoin currently, as we speak, is up 1%. Currently at 61,329. So we're wanting to climb back up to about the $2,000 range. If we're able to get into that range, the $62,000 range, it seems like we're going to be heading towards the direction of getting to $100,000 or more within the next quarter. So we have the rest of October. That's less than a month left in this month. Then we got next month, November. And then y'all know December comes after that. The holidays are coming up. So a lot of action is going to be coming in towards and into the holidays. All right, listen, guys, we need to take a short break. Leave your comments below. I'm going to go into my Facebook Live here. See if we can get some traction going on. Thank y'all so much for checking in. This is Conscious Crypto every single weekday. My name is MC Medina. We're giving you the latest and the greatest in crypto DeFi news. Let's see if I can get this started here on the Facebook Live. We're gonna start sharing because you guys know sharing is caring. I need you guys to leave your comments below. What cryptos are you currently holding in your wallet? Also, tell us what your top 3 wallets are. I want to know what your top 3 wallets are. Let's see. We're going to share this clip here. We're going to copy that. And bam, just like that, we're going live. Let's see. All right. Because the latest and the greatest news right now coming out of New York. And this news came in about 11 hours ago. Let's see. Bam. And we're going to start this description. We are on live, guys. We are on live! Exclamation point. Paste that. Bam. Please visit the link below. All right, as we wait for some more people to get into the chat, I wanted to let you guys know that we do have some guests lined up this week. And weather permitting, we will be able to continue to give y'all some of the latest and the greatest in crypto news. You guys give me a second. I'm going live right now on Facebook. Checking out my angles here. I don't know if this is still in the frame or what. But let's see if we can get some of our friends in. Okay, guys. So New York businesses are asking the governor to deny the permits for crypto mining. As you guys may know, in China has decided to ban all crypto mining. I don't know. They may have even banned all crypto. I'm not 100% sure, but they're really not feeling the whole crypto thing right now in China. And so the miners are looking for different places to go. And it looks like New York does not want to be one of them. The New York State Governor, Kathy Hochul, has been asked by a group of local businesses to deny permits for converting the city's old fossil fuel power plants into crypto mining centers. The request comes in the form of a letter co-signed by a number of organizations, businesses, and labor groups. The letter calls for an environmental assessment for proof of work. Cryptocurrency mining in the state of New York, while urging Governor Hochul to deny permits to convert the Greenwich generating station and the Fortistar North Tonawanda power plants into crypto mining facilities. Quote, proof of work cryptocurrency mining use enormous amounts of energy to power the computers needed to conduct business. Should this activity expand in New York, it could drastically undermine New York's climate goals established under the Climate Leadership and Community Protection Act. Now, this is a very viable point. It looks like it's New York has its own climate Leadership and Community Protection Act underway. Looks like they currently have a plan there. New York State is taking action on climate change. This was tweeted on September 8th by Basil Segos, saying that New York released for public comment a draft air permits for former coal plant turned Bitcoin mine, Greenwich LLC. And the DEC has not made a final determination on the permits, and Greenwich has not shown compliance with New York's Climate Law 1. Crypto news. Thank you, Carol Lee, for checking in so much. Conscious Crypto, guys, every single weekday at 2 in the afternoon. I'm giving you the latest and the greatest in the crypto news. And we're getting into New York's regulations here. New York citing the need for a full environmental assessment related to greenhouse gas emissions. The letter demands Hochul's administration to deny the Title V air permits for the two fossil fuel facilities. On the other side of the world, authorities in Russia are planning to introduce special electricity tariffs for recently displaced Chinese cryptocurrency miners. On Wednesday, Russian Energy Minister Nikolai Shulginov suggested a new energy consumption framework to differentiate tariffs between general usage and cryptocurrency mining, stating, "We can't let miners capitalize on the situation at the expense of a low residential electricity tariffs." According to research conducted by the New York Digital Investment Group, Bitcoin's energy consumption will remain below 0.5% of the global total over the next decade. The study also suggests that the carbon footprint of Bitcoin will be dependent on fluctuations in Bitcoin's price, mining difficulty, and energy consumption. So really, I'm a little I'm being pulled in two directions on this current topic right here when it comes to mining, the carbon footprint. Who's going to be allowing the miners to mine? Who isn't going to be allowing the miners to mine? Look, Texas has a big welcome sign for any miners right now. So it really doesn't make sense to be in a town or in a place where people don't want you. Look, come to Texas, come to Austin. Looks like that's where you're going to find more longevity. And this is coming in 10 hours ago, the all-time high weekly close. Now, 5 things to watch in Bitcoin this week. An exciting week begins with Bitcoin, you guys, back challenging all-time highs and ETF seeing a potential U.S. launch tomorrow. Bitcoin simply refuses to die this week as a dip below 60,000 barely lasts an hour and bears are burned yet again. After a fairly calm weekend, Sunday, October 17th, saw a typical drawdown before a dramatic resurgence took place for Bitcoin and USD just an hour later. With that, Bitcoin has preserved not only its bullish trajectory, but also has sealed its highest weekly close ever at around 61,500. As the market braces for a possible start of trading for the United States' first Bitcoin exchange traded fund, or ETF, volatility is all but guaranteed, say analysts. As we take a look, we're going to take a look at 5 things to consider in the week that Bitcoin and US dollar squares up to all-time highs and institutional access takes a historic leap forward. Bitcoin gives less than an hour to, quote, buy the dip. Just when it seemed that the run to all-time highs had hit a stumbling block, Bitcoin surprised everyone yet again overnight. After losing $60,000 late Sunday, bulls had no time for Bitcoin price weakness, and before Bitcoin USD had even hit 59,000, they embarked on an aggressive buying spree. Hours later, the pair was back above not only 60,000 but 62,000 and has stayed there at the time of writing this. The episode did not even impact Bitcoin's weekly close, which, despite volatility, still came in as the highest of all time, around 61,500. The historic weekly close now means Bitcoin is well positioned for further upside. Trader and analyst Rect Capital summarized on Monday. He added that the next phase of Bitcoin price action will be more volatile than what has come before in the previous bull market, years 2013 and 2017. As various analysts celebrate the weekly close milestone, meanwhile, the upcoming U.S. market open could also provide excitement. Monday, October 18th, could see the launch of the first ever Bitcoin ETF products with the blessing of U.S. regulators, this coming as Bitcoin and USD is less than $3,000 from new all-time highs. On the topic of derivatives, funding rates across exchanges have also cooled since last week, providing relief for those concerned about unsustainable upside leading to a blow-off top. ETFs are, quote, go, but not for everyone. Love it or hate it, this week is all about the Bitcoin ETF. As rumors began circulating about a U.S. regulatory green light last week, Bitcoin price action heated up, and this week looks set to continue on the trend. After years of rejection, the U.S. Securities and Exchange Commission, or the SEC, is preparing to witness the launch of 2 ETF products, both based on the CME Group Bitcoin features. These precede a lengthy decision-making process which begins this month concerning physical Bitcoin ETFs, those with actual BTC as their underlying asset and which form the topic of real interest for analysts. There is no guarantee that those traditional ETFs will get approved, and concerns already abound that the market may end up disappointed once more. With multiple applications to be decided on, however, there remains 6 months for a breakthrough from the SEC. Optimism with the tide will turn in the crypto industry's favor continues this week as Grayscale confirms that it will apply to convert its flagship Bitcoin fund product to an ETF. Grayscale's fund, the Grayscale Bitcoin Trust, has been a talking point in itself in recent weeks, trading at an increasing discount to spot BTC amid fears that institutional clients are voting with their feet in the run-up to the ETF launch. The former's higher fees are one example of the competitive advantage debate, while some have noted that features-based ETFs will not function as a suitable alternative by definition. Quote, to begin with, most institutional players have direct access to CME features. Typically, the main reason they would choose to trade ETFs instead of futures would be to avoid tracking error against spot price from futures roll cost or price deviations to contango or backwardation. Crypto trading from QCP Capital added in a circular to Telegram channel subscribers on Friday. As such, having the ETF based on CME features defeats the fundamental advantage of ETFs to track spot price as closely as possible. Difficulty set for a seventh straight increase. Bitcoin network fundamentals continue to impress this week, and difficulty is leading the pack. What is arguably Bitcoin's most essential feature is going from strength to strength, and on Tuesday, October 19th, is set to seal a seventh consecutive increase. The last time this occurred was in 2019. The increase will take difficulty back above 20 trillion for the first time since June. This comes despite some volatility in the hash rate, with estimates now back down to 123 exahashes per second, or EHSs, having reached in excess of 140 EHS this month. With the overall uptrend still intact, however, concerns are few and far between amid news that the U.S. now provides a home for the lion's share of Bitcoin mining power. Supply Shock predicts a quote, good year in 2022, while Bitcoin price forecasts focus on what might be possible in Q4 this year. Some are already looking further afield and using data to arrive at even more bullish conclusions. One analyst painting a rosy picture for 2022 is Willy Woo, creator and data resource Woobull, and well known for his Bitcoin market cycle research. Over the weekend, Wu highlighted Bitcoin's increasing scarcity as likely fuel for a sustained price squeeze. Historically, he noted decreasing supply combined with some of that supply staying in the hands of holders with no plans to sell creates a powerful bull signal. His metric long-term holder supply shock clearly shows such a scenario playing out multiple times over Bitcoin's history. The technical name for this chart is 2022 is going to be a good year, he summarized to Twitter followers. Now, as reported, long-term holders already control a near record proportion of the Bitcoin supply, leading to expectations that the fight over the remaining coins will be the more heated than ever. This should be assisted when a physical ETF is approved. What's up, guys? If you're watching right now on Facebook, please drop your comments below. Let me know what cryptos do you hold, and what are your top 3 wallets or exchanges? I need to know. Please leave the comments. And if you have a chance afterwards, check us out on the Twitch stream, okay? Because we're Facebook right here live, and then Twitch is over here on this side. Let me show you. Bam. You see, we're on. There's my script, guys. Okay. So please go over to the Twitch and check us out on the Twitch. You might be able to hear me better on there anyways, okay? The next Bitcoin bear market will come. All right, now before we get into the next bear market, I want to stress and take a moment to super stress that the new ETF that's being approved tomorrow is gonna be one of the main things that is gonna help with the momentum. What's up, Antares? Peace and blessings, man. Thanks for checking in. ¿Qué está pasando? ¿Qué hay de nuevo, bro? ¿Cómo andan las cosas allá en El Salvador? Yeah, man. 3 favorite wallets. ¿Cuáles son, bro? Okay, so the ETF being approved is something which could happen as soon as November and continue for several months. The Bitcoin balance across major exchanges tracked by Crypto Quant, meanwhile, has settled at just under 2.4 million Bitcoin after a precipitous fall in September. The next Bitcoin bear market will come with so much excitement about the possible Bitcoin price top this year and just how high it could be. Some analysts are already turning their attention to the flip side, to the bear market. I don't have none. I want to now. What are yours? Bro, Antares, I got you. I'm going to set you up so you can make the most money, bro. There's top 3 wallets are going to be, I'm going to send you all the links, bro. So ni te preocupes. There's no need to worry about it. All the links that I send you is going to make you money. So if you use my link, you get money just like that. Crypto.com, you're going to want that. You're going to want Coinbase. You're going to want Exodus. Those 3 wallets right there. I'm going to tell you more about those. And then, bro, I got you. I'm going to send you all the links. Facilito, just like that. Again, if you guys are on Twitch, please drop your comments below. What are your top 3 wallets? Also, if you're watching on YouTube, I need to know what are your top 3 wallets as well. We're on Facebook Live right now. We're also over here on Twitch. Por favor, vete para Twitch. Check out the Twitch right now. You better be able to hear me a lot better over there anyways. So historically, nothing goes up in a straight line, and Bitcoin is no exception. Each halving cycle has seen a price peak the year after the block subsidy halving, followed by a mid-cycle price bottom. Now, this cycle, several well-known market participants claim, will be no different. Excuse me. As such, a price peak will be followed by an extended come down in line with both 2014 and 2018. So what they're saying is, guys, we're going to be experiencing like a mini dip overall in Bitcoin and in crypto. But listen, it's not going to stay long at all. The dip is going to be very short-lived. We can see Bitcoin already going back up to 62,000. We're at 61.3 right now, but we were at 61.5 before the weekend. So still a lot of room to grow here, guys. We're still going to be going up. There's no reason to pull back yet. Looks like we're going to be so for popular Twitter analysts, this guy named Tech Dev, this floor should nonetheless be an order of magnitude higher than the last, and as much as $60,000 is what he's saying. But the process should already begin before 2021 is over. Quote, I want a lengthened cycle. Who doesn't? But nothing I've seen macro PA-wise suggests it will happen, he warned followers on the weekend. Quote, watch your indicators. 2-week RSI channel, RVI 92 to 93. If they're hit, I'm out. Ignore them in hopes of a new paradigm, and you're likely to get dumped on by those who don't. Out of several accompanying charts, one neatly showed how Bitcoin's relative strength index on 2-week timeframes neatly captured each peak. Fellow Twitter personality Rect Capital likewise took the opportunity to remind followers and subscribers of the need to time profit taking. Thanks for checking in here on Facebook and on Twitter, guys. This is Conscious Crypto. Look, we're getting down to the last 15 minutes, and I really need you guys to check us out on Twitch. Go to the Twitch. Please hit the link. It's Casa de Prana TV, exclusively on Twitch. And then we're going to be uploading the whole show is going to be uploaded on YouTube as soon as the show is over. So normally by 5 p.m. Central Standard Time, you already have the video on YouTube ready to go. And this week, nonetheless, is going to be a very exciting week as we get closer to the $65,000 mark. Very optimistic energy right now, as it's been reported that other measures are eyeing the good times to continue into 2022, even for Bitcoin. Earlier this month, Plan B, creator of the stock to flow based Bitcoin price forecasting models, proclaimed that the bull run has at least 6 months left to run, guys. So if we still got 6 months left on this bull run, that means there will be no dips to buy. We're at as low as it's going to be in the next 6 months, and I really highly recommend people to take advantage. What's up, Tony Lira? Thanks for checking in, man. I just wanted to remind everybody today, Monday, October 18th, we still are in a Bitcoin bull run. And not only that, we've got Ankr and a number of other altcoins that are huge gainers today, including Shiba Inu, including Dogecoin. If you're not already holding these coins, I highly recommend it. In the next 6 months, we're going to see ridiculous gains, guys. Ridiculous gains all across the board. If you're holding Shiba, put a thumbs up in the comments below right now. If you're holding Doge, put a thumbs up in the comments. I was talking with a couple of buddies over the weekend, and I'm getting notifications from Michael Saylor too, guys. Check out Michael Saylor on YouTube as well. Really great content. He's touching up on why would we have our money tied up in 401k, retirement funds, or Roth IRAs, or any other type of investment funds. Why do we have our money that we work so hard for being managed by people outside of ourselves? Why is it being managed by third-party companies? So we want to continue to communicate here on Conscious Crypto every single day at 2 o'clock in the afternoon Central Standard Time on the weekdays. We always want to communicate. To gain financial sovereignty means taking your money out of these centralized banking institutions. The traditional banking institutions are charging us money to hold these resources with them. So instead of being charged money to hold your money, why don't you move it into some sort of crypto account and watch the gains happen? We are also offering crypto and financial abundance counseling and guided sessions. So if anybody wants any type of consultation, we're working with a team of different consultants. So if I'm not the person who's going to be the one consulting you, there will be somebody with a level of professionalism and close to a decade of experience in this market. All right, let's get into some more latest and the greatest. I want to get into some DeFi news. What do we have now? Okay, so we covered the Ankr rally. Three coins that are growing huge right now. We've got Ankr, Stacks, and Cadena. Those three right now, top gainers, along with Shiba Inu and Dogecoin. All right, this story came in by Lisa Gibbons, and this story came in 2 hours ago. Getting back into the DeFi movement, getting back into the decentralized financial movement, how blockchain technology is going to pave the way to a new future. We're going to take a moment and explain this just a little bit. Now, this is a 4-part section, and I only got about 10 minutes left with you guys. So if I don't finish this, we might make a separate video simply on this. But I know you guys want to hear more about how blockchain technology, because you're saying, Medina, you're always talking about crypto, it's the future, and how is it the future? Well, look, this is it. This is explained. It's in 4 parts. Number 1, we're going to answer the question, what kind of advantages does blockchain have for app developers or decentralized app developers? Then number 2, we're going to answer, why is state-of-the-art multi-party computation protocol so important? Then we're going to get into how is a layer 2 solution to improve the computation network. And the last question, is anyone actually doing this yet? Okay, number one, what kind of advantages does blockchain have for DApp developers? Blockchain technology has the ability and the scalability to offer endless opportunities for individuals and enterprises wishing to avail for more secure privacy when it comes to transactions. Private smart contracts for DApp developers can preserve individual and enterprise privacy protocols and highly scalable infrastructure. Current blockchain technology reaches on-chain consensus in such a way that every operation is repeated by every node in order to verify its validity. This soon makes the blockchain unscalable as the network grows. The correctness of computation is variable even under malicious majority conditions, using information theoretic message authentication code, or MAC, and the privacy is preserved using secret sharing. With, quote, state-of-the-art multi-party computation protocol, end quote, as a layer 2 solution. The privacy-preserving computation can guarantee data security on blockchain cryptographically while reducing the heavy lifting computation job to a few nodes. All right, number two, why is the state-of-the-art multi-party computation protocol so important? The protocol has several implications for the future of decentralized networks. First, the secure computation can be used to expand the types of on-chain computation. Second, it enables data to be shared and used in a trustless network without disclosing the raw data during data at use, so that data ownership and data usage are safely separated. Last but not least, computation and verification processes are separated, which can be perceived as computational sharding. And it effectively increases the transaction processing capacity as the number of participating nodes grow. Number three, how to use a layer 2 solution to improve computation network. A secure computation network is a layer 2 solution. A secure computation network as a layer 2 solution applies to any blockchain system. A certain protocol, such as proxy smart contracts, can be used as a bridge to link the blockchain and secure computation network. Additionally, these contracts can be used to ensure that outsourced computation is completed correctly. To achieve this, a project can develop a general MPC network to support 1. Secure computation, layer 2 computation, verifiable computation, and privacy-preserving data exchange. And number 4, is anybody doing this yet? That's a great question. ARPA chain, ARPACHAIN, ARPA chain is a secure computation network compatible with blockchain. It uses an MPC protocol that creates ways for multiple entities to collaboratively analyze data and extract data synergies while keeping each party's data input private and secure. That's the hack. Earlier this year, ARPA joined the Commission on Blockchain Technologies and the Crypto Economy of Russia. The development team also engaged in a large-scale test for preserving privacy. ARPA's team is currently focused on architecture design for RANDcast. The project proposes a blockchain-based secure computation network of multi-party computation, or MPC. ARPA cryptographically enables private smart contracts, unprecedented data at use privacy protection, as well as scalable computation sharding. So that's a little bit on, that's about, let's see, what was that? About 4 or 5 minutes on strictly how the blockchain technology is going to be paving the way to a new future. And we've got about 4 minutes left, and I want to get into some of the hottest stories right now. And for the last 4 minutes, let's get into why would you hold for 48 hours? Because altcoin wallet will thank you. Okay, even in the fast-paced cryptocurrency market, favorable conditions that fuel massive rallies often take days to materialize. It might seem that the volatility of digital assets prices and the lightning speed with which crypto markets move would mean that those who act fastest secure the heftiest rewards. And in certain cases, this holds true. For example, when an announcement of a token's listing on Coinbase or Binance first goes public, the asset's price line becomes all but vertical. But in many cases, the tortoise beats the hare. This principle is clearly at work when it comes to traders using quant-style tools to enhance their decision-making. One example of Vortex Score is an algorithmic comparison between historic and present patterns of market and social activity around a coin. While the Vortex algorithm is trained to detect historically bullish conditions around crypto assets, high scores are rarely followed by price surges immediately. In fact, the highest returns consistently arrive over the next few days after peak scores show up. What does it reveal about the nature of the crypto market? The early bird gets the worm, but also waits to eat it. Exclusively available to the subscribers on Cointelegraph Markets Pro, the Vortex Score is an artificial intelligence-powered indicator that looks for historical similarities across a multi-dimensional set of variables. Excuse me. These include changes in the price of a crypto asset, trading volume, social sentiment, and tweet volume, among others. The higher the Vortex score, the more confident the model is that the observed combination of that key metrics around that token resemble past conditions that foreshadowed significant price hikes. Scores above 80 are considered confidently bullish, while a rarer side of a 90-plus score suggests that the asset's outlook is tremendously favorable, judging its historic record of price action. The timing, however, is intentionally fuzzy, as the model is designed to detect conditions that had previously preceded rallies by 12 to 72 hours. In fact, although the algorithm is designed to flag bullish conditions as early as possible, it consistently delivers best results to crypto traders within days rather than hours. Historical data shows that, on average, assets that score high on the Vortex score deliver consistent small returns as soon as 6 hours after reaching the scores of 80, 85, and 90. Thus, crypto investors who rely on Markets Pro data to refine their trading strategies are often tempted to lock in profits early. The same data, however, suggests that it often makes sense to hold steady rather than grab the initial gains. HODL, if only for a day or two. The table below represents average returns after a crypto asset cleared a score of 80, 85, or 90 over a week. Each asset could only yield one observation per day, i.e., if a coin went from 79 to 81, then back to 79, and then 80 once again in a few hours, only its first entry to 80 plus would count. All right, we're gonna be closing up, guys, on Conscious Crypto. Let's see how much time do we have left here. Let's see where we are on our time. I'm not sure where. What's up, Jeffrey Carter is in the building. Yeah, I'm waiting on Guy Electra to get back into the room here so we can see where we are on the time before we close it all out. Guy Electra, where are you? We'll find out where is Guy Electra. Yeah, we're waiting on her to get back into the room here so we can close out the show. But thank you so much, you guys, for checking us out here on Conscious Crypto every single day at 2 o'clock in the afternoon. We're bringing you the latest and the absolute greatest in crypto DeFi news. We got David Prana-Holistic in the building. He just walked in. Where are we at on the time right there? Do you see how long we've been? Okay, we are good to go, guys. Thank you so much. We're going to be back tomorrow at 2 o'clock Central Standard Time. My name is MC Medina and Conscious Crypto every single day at 2 o'clock in the afternoon, giving you the latest and the greatest in DeFi news. Listen, guys, stay conscious and stay getting that crypto. Peace.